And hi everybody, it's Tim Reazor with Revere Asset Management just after 3:30 here on a Wednesday night. So quickly, stock nerds, market lovers, before we begin, listen, and there's a lot to talk about tonight. Let me just show you something here, the podcast. I think this podcast is really, don't let the title fool you. This is, longtime viewers of the podcast know you were set up for what's happening this week based on what we've been talking about. The last 2 weeks, if you haven't, if you're just catching up, recovering after the holidays, getting in the swing of things of 2022, give these last two podcasts a go. You can watch them, you can listen to them wherever you get your podcast, Revere Asset, Your Money. I think they really help. And it's not the same inflation bad, and it's not the same stuff you've been hearing. It's a different approach and a nuanced approach to help you have practical information so you can do something with it to make yourself money or save yourself money. And so I really think that those two tools, they set up a lot of what's going to happen here in 2022. And then listen, any questions, concerns, comments, take umbrage with anything that I'm saying. Tim at RevereAsset.com. Listen, I want to talk so much about stocks, and I'm going to I want to show you a market that I think this market right now is comparative to give you even more insight into what could be setting up here down the road. But listen, want to talk to me, Tim at RevereAsset.com. I want to talk to the fellows who make all the buy and sell decisions in the portfolios, what goes on the watch list, why something doesn't go on the watch list, what they're thinking is the next move. Don, Alex, Hunter, talk to them. Listen, that what separates us from everybody else in the free world, especially the strip mall advisors, is that we're accessible to you whether you're a client or not. And we always have time for stock nerds and market lovers. I want to talk to America's fiduciary right here, helping people understand that life insurance is not an investment, that annuities are insurance products, and there's a lot that goes on with that, or trailing fees that you've been paying for 20 years to the salesperson who sold you that annuity, and helping you get out of that type of thing. You want to talk to America's fiduciary about all that? Please give them a call, 855-732-5932. So, oh, and then listen, a lot of you like Twitter, and so I get messages across the transom all day on Twitter. There's one right there. It's like we're texting buddies. So at TJ Reazor is how you get a hold of me, and you guys are real quick on Twitter, meaning you use brevity, which I appreciate, and it allows me to get back to you much more quickly. When you email me, oftentimes those questions are a little bit longer, and it takes me a little bit longer to respond. So I appreciate Twitter. I appreciate the brevity. My DMs are open, so you don't have to follow if you don't want to. Okay. So with that, stock nerds, market lovers, these videos are for what? Your edification purposes only. These are never ever be misconstrued advice. When advice, if I seek advice, all you have to do is, in fact, give us a call at 855-REAL-WELL. So look, this is super simple here. Oh, markets are bad. Okay. And so let's examine that real quickly on current daily charts. And I want to show you something that I think we're going to track throughout 2022 together. So look, you're just back here to the fall. Okay, you're back to November levels. These are the S&Ps. You're kind of in no person's land right here, right? Because this is the 200-day simple moving average. And you've come down now to this breakout from October, which you retested, and now you went to new highs, and now you're retesting that level again. And you got to remember, markets are designed to take half back. If you go through time immemorial in markets, they're designed to take half back. And well, Tim, what do you mean designed to take half back? So let's do this. Let's take this level all the way down here, and magically, look at this. So from the high to this very fallish low, this early fall low, you're right at about, you're a little bit over a 50% retracement from that high to low. This is like normal. So there's a lot going on, right? We have inflation, and we have an economy with slowing trucks, with no stuff on them. And all this is true, but right now the market is just acting normal. And that might not be a perspective you want to hear, right? But it's kind of my job to show you the perspective to which I see, and we can get out of our own way by just kind of looking at the facts. Now, can this sell off to the 200-day? Hell yeah, it can. That's all the way down here at 44.19. Believe me, that would be some kind of flush. But let me show you something on a weekly chart that I find super interesting. Now we're on the ATR chart, and those of you who are newer to my work, everything reverts back to the mean, right? And the mean's a 21 period. And then -1, -2, -3, and then of course this would be +1, +2, and +3 ATRs. ATR of what? Average true range right here. So every +1 is $136 period, +2 is 2 of those, 3 and 3 of those. You get how that works. So look, we're right here is 1, 2, or excuse me, 1, 2, and 3. There's the mean. We're just closing below the weekly mean here on S&Ps. Well, Tim, do the Nasdaq. The Nasdaq's the one that's really having trouble. The Nasdaq is so weak, Tim. Okay, well, let's look at this, right? So where are we at in time and space? Sorry about that. I actually made myself cough with doing those voices. So where are we at in time and space here? Look, we're on a weekly chart. Here is the weekly mean, okay? And we haven't closed below -1 yet. When's the last time we came down in this zone? Yeah, back in the fall. And when's the last time we came back? I mean, it's a long time. So right now, we're not really breaking a lot of support. It feels awful because look at what a bunch of stocks have done, right? It feels awful because there's a bunch of selling off going on. Nasdaq is down here. You would expect. Now, it doesn't mean just because you would expect it, like at least some kind of support here at the 200-day. I'm not saying we won't sneak down below it and take a peek, but you would think that some support comes in there. Doesn't have to, but the market feels a lot worse because I mean, look at stocks like Square, uncool, right? Like, and this is why buy and hold is so difficult. And PYPL, we're not advocates of it at Revere. Look at PayPal, right? SoFi was in the news today, right? Because they got their banking charter. Look at SoFi. Like, how about Snow? I mean, you could just do this on and on and on. How about Peloton? I mean, I mean, listen, I mean, what is Peloton? I need to do. Look at Peloton, 171 to 31, right? Oh, how about gambling, right? With football season, really, playoffs. I mean, this is astounding, right? 74 to 21. How about Penn? Yeah, and so Penn at 142 to 43. And so even cult of personality stocks, right, where there's really popular people behind them, like there is with Penn Gaming, they don't, the market forces are the market forces. The market is the almighty, and it takes everyone eventually down with it. That's why you gotta be on your toes. But I think what is setting up here is potentially a reversion that is to be shorted, or could be shorted. You don't have to do anything. A reversion back to the mean that could be shorted. And so let me show you that. And then I want to show you the market from 2000, 2001 that I believe we're tracking in here. So here is on a daily chart where we are in time and space. Now you can't clear the 5. The reversion to the mean would be all the way up here at 46.69. Do I think we're going there? I don't know, but let's look at this on a weekly basis here. Where's the here's 40. What is that number there? I've got on the weekly up here. It's 45, 72. First you get 40. Let's just go see if we can take back the weekly mean, right? And then can you start on a daily chart? Where are we at on daily? Let's show you that. Can you start crawling back? Now look, it's also options. It's also, options expiration week. So here's the 46. Do I think we could come back to a falling 21? Yes, I do. And it doesn't mean we're going to do that, but I think that is quite the possibility into an options expiration week. And look, right now the bulls had an opportunity today and they didn't take advantage of it. And so it's definitely a weak market. Maybe it's weak overnight, but to rush back here to the mean in the Nasdaq, you're at 15,000 right now, and the mean is up here at 15.8. So is that doable? Yeah, that absolutely is doable. And so this is a very, I'm not telling you anything you don't know, it's a very difficult market, right? So, but leaning, all short here, or it's one thing to be bearish, right? You can be bearish on the outlook of the market, but understand that these reversions, whenever they happen, they're going to happen. It's whenever they happen are going to be extremely painful if you go into them short. And so do you want to short in the hole here? And the answer is no. The new point to establish would be up to this zone of the 21. Can the market get up there to the 21 or even this 50, this, well, I'd have to redraw this, but this 50% retrace, somewhere in this zone here is where you want to take if you're not short, where you would want to potentially become short. And so, but look, stranger things have happened, right? And so you just, every day, every day isn't an opportunity in the market. And so kind of sitting on your hands, being in a lot of cash, not every day, not everything is an opportunity, but look, if you start moving back up towards this mean, people are going to start getting what, right? And it's going to set in real quick. The FOMO, right? The fear of missing out, that we're going to go back up here, start taking up highs. And look, not to say it's different this time. Look, this is the first time in a long time that you're going to see probably 3 or 4 rate raises. The tapering, it's a double whammy right now. I don't think you're going to see some kind of Fed pivot, but that's just an opinion, and my opinion doesn't matter. It's the market that matters. But let's set this to a monthly chart real quick, and I want to show you the market that I think that is the market we're in right now. Let's go back to 2000. And so here is a month. Now we're on a monthly chart, okay? And everyone talks about the dot-com implosion. So, as a matter of fact, let's not even look at S&Ps. Let's look at the NDX. NDX monthly chart all the way back here in 2000. So the Nasdaq 100. So stocks go on this amazing run, right? Just amazing. But here is the end of 99 and the start of 2000. When I just drew my chart there. You peak. You come back, but it looks like you're going to come back up here and take things out, right? And look at where you come down here in the beginning of 2000 to the monthly mean. That's the mean, right? The 21. You bounce. That's a good bounce, right? And then once you close below that monthly mean, then it really gets, it really gets bad. And so, well, where are we right now in time and space? We're at the weekly, and we're at the monthly 8. We're at the monthly 8 period. And the last time we did that, 2018, right? Talk about, well, to come down to the mean here, was the rate raise, right? In December, the Powell pivot, right? The Fed pivots. No, we were just kidding. We can't stomach declines like that. And then you get a little retest action there, a little monthly retest action here. And then before you know it, Bob's your uncle, the market's taking off. Oh, well, Tim, that was a pandemic, of course. Oh, that's right, it was a pandemic. And so do I think we're coming down here to 13,000? No, I think 14,000 could absolutely happen. I don't know if it's going to happen tomorrow, right? I don't know if it's going to happen on Friday or Monday. I think this market is, it's pushed from 16,764. It's hit correction territory, right? So it's down about 10%. Well, how do you know, Tim, it's down about 10%? Show me. Sure, I'll show you. So we'll just take a little drawing tool and we'll go down to here. And you can see we're at 10.24%. And so is that all she's got? It doesn't have to be. It's a market. Anything can happen. But understand that things look bad right now and they feel bad. This is just back to the monthly 8. Okay, we're back to fall levels, to November, October, September type levels, depending upon the indice. And so understanding that is huge. Well, what if we came back to the monthly mean? What level is that? Oh yeah, pardon me. It's back here at this 14,000 level. And to get there, you might have, the markets might have to get some more people bullish. And how would markets do that? Get a few more people. Oh yeah, rally back up to the daily mean, right? Or rally back up to the daily mean, and then potentially want to roll over. And so I think a little perspective here is absolutely apropos as we sail into the first monthly options expiration, and there's going to be a bunch of shenanigans going on. It'll be interesting to see where the S&P settle out come Friday. So look, and we'll have a lot more. Look, the podcast, we're going to do the podcast on Friday. It's going to, you'll be able to get almost real time analysis of what markets are potentially setting up to do the last 2 weeks. of January. So listen, stockholders, market lovers, you know we love you. If you have any questions, don't ever hesitate to reach out to us. And with that, Hunter has your video Thursday, and of course, I'll be back with you with all the fellas on Friday with the podcast. I hope it helps, and I'll see you at the next update.